Let's move on to Remgro, bringing it home, which invests in financial services, healthcare, food, liquor, shipping and other sectors.
Yes, indeed. So remember in 2008 when they reorganized the Rupert family interest, this one emerged as the wholly South African located, but still Rupert managed. Johan Rupert is the executive chairman. It's got its own board. They do operate a very interesting and very effective suite of investments and constantly tinkering with that portfolio.
Market cap 121 billion rand, PE ratio of 15.2 and a dividend yield of 1.9%. It is under, who's at the helm at the moment?
Yanni Durant is really leading the investment strategy. It's been a long-term success story, and interesting there. They did have a little bit of resources. They had Impala, which they unbundled to their shareholders. And really, so it's a focused financial and industrial group. Interestingly, more recently, their main investment activity has been in backing Mediclinic and becoming Mediclinic International, the acquisition of Al Noor and that reverse listing onto the LSE. And that's become a significant portion, over 40% of the underlying NAV of the group now. So diversifying away from pure South African assets because Mediclinic is becoming an international hotel group.
Haven't we been a little bit disappointed with Mediclinic's performance? Well, or net is it actually up?
Confused everybody a bit by doing the listing in the way that it did, which reset the price and the number of shares you had. But in general, it's been a successful investment. It just doesn't look that way in portfolios because of the rebasing since the London listing. But look, to come back to Remgro, that is a very attractive part of the portfolio. The other big chunk is financial, which is interests in RMI and RMH, which in turn gives you the First Rand Group. A little bit depressed at the moment on the banking side, but the insurance assets, still first class.
Let's have a look at the share price. There we go.
Which is a pretty solid performance. It's done what the rest of the market has done in 2015, 2016, but prior to that, it really soldiered upwards on the back of that rising Mediclinic and First Rand share price.
But isn't it tracking sideways to down now, Rowan?
Yes, yeah. So I think that reflects, as I was saying, the sort of mood of the market. I mean, these are quality assets across the board, but really they've kind of topped out at valuation. I think banks, as you mentioned, under some pressure given the domestic political outlook. Ratings downgrade, so this is weighing on the stock and the valuation. So hard in the short term to really get excited.
If you believe that the market is going to ramp up quickly, then potentially looking into an entry point in Remgro at this point?
Yes, and we track the discount to NAV quite closely, so that gives you an idea when it's sort of relatively cheaper. It's around 18% at the moment, which is wider than it has been in the past. So it is a bit more of an attractive entry point again, but it's your call on the markets.
Your call on the markets. Paul, we're still bullish on the markets, aren't we?
Yeah, for sure. Look, there are two areas of growth which are worth noting. The one is food. They've reorganized and birthed, in a way, the old Rainbow chicken into RCL Foods, put in the sugar interests, and it looks as though that could be the beachhead for some further work in that space. I quite like their IT strategy as well. They've got a big investment in Seacom and in Dark Fiber Africa. That's quite interesting. But, it's a bit of this and a bit of that. On the food side,
with that chicken exposure, chicken potentially quite a tough business to be in.
And of course, they added to that sugar as well. So they took Food Corp, TSB, and RCL, and they're trying to reposition it so it's not seen as the chicken business, but rather as the branded foods business.
So there's diversification away from.
But that's the nature of their
industry
role. They've got capital, they can do bulky deals, they can assist their subsidiary companies in doing interesting transactions like with the Mediclinic. So I think they'll remain active.
Are you invested?
We are invested, and it's something that you can get in and out of and trade a bit as well, so it makes it interesting if you that way inclined.
And is your investment largely motivated by that 18% gap that's opened up between its correct valuation?
So you would pick it and say now it's looking cheaper in terms of the cycle. It could close that gap and get to 10 or 12%, then we may relook at it.
Is that the average, a discount to NAV of 10 to 12%?
It has been, it's been in that range between sort of 10 and 18 actually, so it does move around quite a lot.
No, it's at the lower end of the band.
Correct.
Paul, first of all, do we own it? Have we owned it?
We've owned it in the past, but what we've tended to do since then is to own the underlying pieces of it that we like. So we are active and invested in a whole suite of things, which they in turn have investment in. Most, of course, Mediclinic, but we are also in First Rand, and we are also in some of those underlying entities that leak down.
And that's the decision you need to make when you come to these diversified industrial holdings.
Yeah. So we've chosen to go the route of investing alongside them rather than in them.
I suppose diversified investment holding companies, hot or not?
Hot.
Hot or not?
I'll call it hot because obviously if I'm hot on the pieces below it, then it would make sense to be hot on the top as well.
Yes, that does make sense.